Alright, good morning on this Monday, May 6th for today's free video. Let's take a look. We are looking at a chart of the E-mini S&P 500 chart here, and I want to show you what I'm looking to do. Obviously, this market is extremely overextended to the upside. Now, that's not to say the market can't continue chugging higher, because as we saw from 1995 to 2000, the market kept going higher, and people kept thinking the market can't go higher, but it did, right? And does it have the chance to do that again? Can it continue moving higher? Of course. Am I looking for some type of pullback? Sure. So is everybody else, which makes it more evident that maybe the market continues going higher. But I need to see some type of price pattern up in this area before looking to go short, okay? So, if you recall on Friday, the market gapped open, right? It opened higher in all-time new territory. It actually opened and closed near the bottom of that range, which is kind of a bearish sign. But look at today so far, Monday. Today we've got an inside bar. The market is starting to contract. The market has not been able to take out the high of Friday, nor has it been able to take out the low. So, you know, we'll see what happens, but I'll tell you this. If the market is able to trade within today's range and not break up through Friday's high or down through Friday's low, then that would set up for tomorrow to potentially be a trade to the downside. So let me talk a little further on that. But first, I put a white horizontal line on the highs prior to the gap, which should act as some type of support on the way down. Okay. And of course, if the market takes out this white horizontal line, which is about, in the E-mini futures, is about 1593.5, if it takes out that support level like a hot knife through butter, then that's just further evidence that we'll move lower. So I'm going to tell you what I'm expecting if the market starts to break. So again, a potential setup for tomorrow would be if tomorrow is able to take out today's low. Okay? What would make it more powerful is if today is an inside bar, right? If the market is not able to take out Friday's high or take out Friday's low, then we would have what I call an inside pattern. The market starting to contract. So what I would be looking to do is either taking a short trade as the market penetrates down through today's low, or for those of you that trade IRA accounts, you could either buy the VIX, VXX, so as the market breaks down through the low of the E-mini futures, right, breaks down through this low, you could buy the VIX, and that'll go up in price, right, the fear index, VXX. Or you could buy in the index, a reverse index fund, which is the SDS. So if the market breaks down through today's low on the E-mini futures, you could buy the SDS, which will go up in price, or buy the VXX. Okay, so SDS or VXX, you would buy those long if tomorrow's trigger occurs, if the market trades down through today's low. Does that make sense? So I'm going to do a couple things. I'm going to draw the first Fibonacci retracement is I'm going to measure from the last low, which I like to call an active low. That's significant, right? These lows are significant. They're, right? This low, 1530 3/4. This low that was put in place on April 5th, 1533, and then this low, 1531. So they're all very, very similar to one another. We've got a horizontal support level, right? Look at that. If you connect these lows, very big levels here. This low, and this low. So we want to draw the fibs from this low, right? April 18th low to Friday's high. And as you'll see here, the 38.2% retracement is down at 1582 even. Roughly 1582 even is where I would expect this market to drop back to. Now, of course, before we hit that level, I would expect some type of support to come in play on the old highs, right? The 1593 to 1593.25. Okay, but the next level, certainly the 38.2 at 1582. Next level, 50% retracement of this last swing, which is down at 1572, and then the 60. If we start breaking down through the 61.8% retracement of this last swing up, then I would expect the 50 to to be tested, and then potentially these lows that I have. So that's what I'm looking for. Of course, what I always want to know is I want to know the yearly Fibonacci retracement lines as well. That's the low of the year up to Friday's high, and that puts you way down here. The 38 of the entire year's up move is down at 1546. So that's what I'm looking to do. That's where I'm looking to for the market to drop back to. But again, I need to see the trigger. I'm all about price action, okay? And again, you know, talking about Doc, you know, everything Doc teaches in his options program, the credit spreads, are phenomenal, and that's what I use in my own trading as well, apart from my directional trading. So he's been a big factor here. You know, he was a student of mine for 7 years on from 2005, but he's joined the Trading Concepts team a little over 2.5 years ago, and he's just done a great job. He's an associate of mine. He's also a mentor of mine, so he's great. So he's taught me a lot of great things through his program as well. And so again, there you have it with the E-minis. That's what I'm looking for. That's the general market right there. Let's take a look at a couple other markets here. First stock is the pharmaceutical company. We are trading down at the 50 exponential moving average right in here. You see my cursor. Okay, the pink, the deep, the hot pink line is the 50 exponential, and then the purple down here is the 200 exponential. So what I've done on this chart was I've taken the yearly low on this stock, which happened to come in play on February 21st, this low, to the high that was put in place on April 23rd, and I measured the fibs. And look at the 38.2% retracement was actually hit today at 89.40, and we're back at the 50 exponential. So I'm looking for this market to potentially turn higher. I'm looking for some type of price pattern in here, but I believe we're at a price level where this stock should hit support and start moving higher. So I'm going to keep that on my radar right now. And one other stock, Baidu, B-I-D-U. B-I-D-U. The last stock again was ONXX. Okay? So Baidu, now this stock has really got smashed, right? Market's been testing these lows down in here, and I've been looking for every reason to be looking to buy this, looking for this market to start advancing. So again, the only two stocks really that are on my radar right now is ONXX, support in here, and I'm looking for Baidu to start moving higher. Today so far has been up. All right, so that's my view of what I believe that I think the market can do. Again, I'm all about price action. I'm looking for today to consolidate, to stay inside of Friday's range, and if tomorrow can break down through today's low, whatever that low may be, again, it's only 11:28 right now in the morning, so we've still got a few hours of trading to go. So I'm looking for tomorrow potentially to trade lower if it takes out today's low, and I'll give you a foundation behind that trade tomorrow morning before the market opens. Okay? So hope you enjoyed it, and if you've got any questions whatsoever, let me know. And I think Doc may be off today. He's not feeling very well. He's under the weather, so you may not be getting a fresh daily video from him today. But for sure tomorrow he will be back. And again, if you've got any questions, let me know. Hope you enjoyed this video. Have a great day. Bye now.